Let's bring in Erwin Jackson now. He's Director of Policy at the Investor Group on Climate Change. Erwin, I want to talk to you about the mandatory disclosure of climate risk. This is something Jim Chalmers announced yesterday. A lot to get into with that. But let's start with this row with the gas producers. It's really quite interesting to watch, to look at them express shock and surprise. I don't know whether anyone else watching this debate over recent months would have expected anything different. It's almost bewildering to think that they would be surprised right now at the government's intervention here, Erwin.
Well, certainly a lot of the claims that the gas industry has been making over the last 48 hours are pretty predictable. We've seen these kinds of media campaigns, unfortunately, as a very common occurrence in Australia over the last 30 years or so. But I think from an investor's point of view, regardless of before the Ukrainian crisis, gas was always a relatively high risk investment in Australia because of the growing focus internationally on shifting away from fossil fuels to renewables. Post-Ukraine, that's accelerated even further. So the idea that we're actually going to get large-scale institutional investors to be backing new large-scale gas supply is sort of a bit off in fairyland, to be honest. And we need to start having a sensible conversation about how we manage the transition away from fossil fuels. Because remember, just a month ago, the World Energy Agency said the golden age of gas is over. The world's response to the Ukrainian crisis has accelerated the transition away from fossil fuels, and indeed fossil fuels have probably peaked now. So how do we develop that long-term strategy to ensure Australia is competitive in a world which is powered by zero-emission electricity sources and other forms of energy is the really important question that I think the gas industry really needs to be coming to terms with.
And part of that is this new framework. I know the Investor Group on Climate Change have been arguing for this mandatory disclosure of climate risk. There are many ASX companies that already do this. I guess the challenge is to make that a universal requirement. Is that right, Erwin?
Well, it's to make it universal to ensure that we're attracting capital into the Australian economy. Climate is, a mainstream financial risk, which is being baked into global capital markets. They're looking to invest in clean energy and other low carbon solutions. They're looking to place that money in jurisdictions which have the best policy frameworks and which have the clearest information around what the climate risks and opportunities are. And in the absence of that, you'll continue to see investors look for placing their money in other parts of the world and other markets. So it's a really important reform and one that we really welcome. Now we've just got to get the details right.
Has the problem, in terms of consistency in reporting, is it basically because there hasn't been a consistent baseline upon which business has been able to look to and then respond?
That's right, and it's not just an Australian issue. This is an international issue. Mandatory climate-related disclosure regimes are emerging in every major market now, and having consistency between those schemes is actually quite important because the last thing we need is market fragmentation between disclosure requirements, which will make investment harder. You can imagine, investment teams of 20, 30 people looking at all the different regulatory requirements to meet the compliance in lots of different countries. So having an international baseline, an international standard implemented in Australia is important. And we've actually seen that work progress quite significantly internationally over the last year or so. So now is a really good opportunity to implement that as the baseline in Australia.
The major representatives in the finance sector have endorsed the plan. The big four banks, super funds, insurers, they've all said this clarity or this direction is welcome. So far from being opposed to it, they're almost embracing what some would say is a form of green tape.
Well, you don't often get an industry to be arguing for more regulation. And that's certainly the case we have here. We have broad support, as you say, across the finance industry and in many parts of corporate Australia as well to implement these reforms. And that's because, companies know that if they're going to attract capital, they need to be disclosing climate risk information, which is consistent, comparable, and meets that global baseline I mentioned. but it also just cuts down on the bureaucracy within companies, the reporting requirements in companies, and hours upon hours of conversations between investors and the boards of companies just to try and work out what these disclosures say. So having that clarity actually promotes efficiency in the market, and that's why I think we're seeing the finance sector overall and many parts of corporate Australia supporting these reforms.
You've been saying to me for months, in fact years, that the dollars are all heading into this space. That's where the funds are going, and you know, there's really not much argument about that. That's where the dollars are heading. Erwin, for those viewers watching today thinking, okay, that's fine, but what about this stumble transition we've got here? How does the government get that renewable investment into our grids in a way that's going to see the benefits sooner rather than later?
Well, I think what is really important, and the government has accepted this recommendation from the Climate Change Authority just last week, is we actually develop sector-by-sector detailed plans about how we're going to make the transition. It's not just about electricity, it's about our industrial sources, it's about manufacturing, it's about transport, and having clarity on those plans is really important for investors. And it's not about unnecessary subsidies, it's about showing the direction of travel. So where do we want to be in 2035? Where do we want to be in 2050 for each of those sectors? And how governments are going to support, importantly, the communities that are going to be impacted by this transition. Because we all know that if communities are left behind, if communities aren't treated well in this transition, that's going to create political backlash, which will ultimately increase costs to the economy, because the transition will continue to be disorderly and not supported in a bipartisan way, which investors really need.
So what sort of big business is already sort of leading the way in terms of the response here? Because we sort of touched on it earlier, but give us a sense of how much of the corporate world is really leaning in and already leading on this front.
Well, part of the reason we're looking to and moving towards mandatory disclosures internationally is that it's a bit of a dog's breakfast. We do have some companies who are putting forward very robust disclosures, and those companies are attracting capital. They're getting the biggest funds in the world to support them through the transition. But what we're also seeing from a large number of companies also are some fairly spurious claims. Like there's a reason that Woodside and Santos got the worst climate change votes at their last shareholder meetings, because they don't have any details of their plans. They're relying on offsets, and they're sort of operating in this fantasy world where we continue to grow and export gas forever, which I think the global investment community knows is not the real scenario. So this is why mandatory disclosures are really important, because they actually provide a level playing field for everyone. They provide clarity on what needs to be reported and what doesn't. And let's be clear here, we're not asking fish and chip shop owners and others to do this. What we're looking for is where the real material risks are in the economy, identifying those and making sure that those are reported so that investors can manage that risk, invest in the opportunities, but also so that our financial regulators can help maintain financial stability.
Erwin Jackson, Director of Policy at the Investor Group on Climate Change. Thanks. Talk to you soon.